Hi everyone, welcome to a massive Monday market update. Boy, do I love checking in on the markets. Every single Monday, we have the weekly and the daily close for all the cryptos. So we tend to see a lot of action and get a bit more information rather about where this market is heading for the next 7 days. So I want to crack straight in, and just a brief summary of what we're going to cover today. I'm going to cover SHIBA INU because it's had a really, really good pump overnight. I'm going to discuss whale games and why you need to be a little bit careful with pump and dumps in these situations, especially in bear markets. I'm also going to discuss Bitcoin, why it's compressing and it looks like it's headed for a big move. And I'm also going to cover Ethereum leading into the merge and what I'm seeing on the price charts. I've got the buy and sell areas all lined up for you so you can make a more informed decision. So let's crack straight in. I want to start on good old Mr. Big Bitcoin. Now, I'm going to just quickly focus on the trends, the weekly, the daily, 4 hours, so you can get a bit more of a clearer picture of the puzzle that we are looking at here. So just on the weekly, what I really like about what the weekly is telling me is that 200 weekly moving average that we have been talking about ad nauseum for the last few months. We were underneath it, a little bit nervous that we were going to go below. So the longer we were underneath, then you have to take into account that the more likely is that we're going to go lower. It didn't happen. We kept climbing. Now, for me, to get more confidence in the market, especially in Bitcoin and in altcoins, is when we found ourselves back on top of the 200, finding it as support rather than resistance running up against it. So now we're on top. We're finding it as support. We've closed above it this previous week. So we closed above it really the last 3 weeks. That was the first one there, but we really wanted more information. We wanted more information. The market was digesting the CPI data, that we're moving through all that. The macro was improving. And I think right now we're actually in a phase where a lot of bad news is actually becoming more neutral, if not good news. So we're just being flooded and overwhelmed with bad macro sentiment news. Now the technicals and the fundamentals are going to actually take over for a little while. So that's where I see things. This is a really positive close. So above that 200, now we're moving above the 2400, 200 level. Serious key point of support and resistance here. Now that we're above it, we have a bit of a license to run up to about 28,000. I don't know if we're going to get there. I've just got on my charts the two key levels that I'm looking at right now. 28,000 short-term holder realized price. So if you're OFO with on-chain data, you know what that means. Essentially, it's a level that has been respected historically as an area where short-term holders, that's their average buy price. So the market really gravitates towards that as support and resistance. So keep that in mind. And then a little bit higher, we have the 200 daily moving average around 33,000. Now you can't see the 200 moving average here on this chart because of the weekly. I'll go down to the daily in a sec, but right now, really love that we are above the 200. Also, we have broken out of this downtrend in the RSI. We're just out of it now. So whether we come back down, have a bit of a move back down to the 200, absolutely possible. That would see us come back down and retest that breakout. Don't worry about that. That's for the daily. But really, the next major target that we are looking at is the 21 moving average on the weekly. And that is this blue line here that snakes down. When we're above the 21 on the weekly, it means we're back into a bullish phase of the market, which is very, very exciting. Then we can start to look at what crossovers that we need to watch, what moving averages that, when they're crossing with death crosses, golden crosses. Generally, the higher you're looking out on the weekly and the monthly, the more data you can get. And the 21 on the monthly is even more special. We won't look at that today. But right now, we're in this nice little Goldilocks zone where we do have a license to run if the bulls show up. If they don't, then we're probably just going to go sideways around here, which is fine. Let's pop down to the daily trend just quickly. So on the daily, what I really want to focus on, again, is the positive trend. So if all else fails and you can't get a good read on the macro, you're looking at a bunch of different things. You just want to look at the trend. Generally, markets follow what trend is happening. Trend is your friend until the end. What we're seeing here is these higher lows and higher highs. So each low you see here is higher than the previous, and also the highs are higher than the previous. You see high, 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 each time going a little bit further above. And you can see here, we are just really straddling this 24,000 zone area. This was a range down here. You see price was respecting this area here. This may well be a new range up here. If we get to 28, we likely come back down to 24. So that could be a bit choppy. Bear market bottoms and bear markets, as we're trying to get out of them, will become very choppy. You'll find ranges. We will have certain small moments of excitement where we blast up and break resistance zones. But then we really have to expect we're going to have those pullbacks in line with the Fibonacci. So just quickly, again, that second target, you can see the 200 daily moving average is there, that red candle. So every single candle here represents a day's price action. So this line here is the average of 200 of these candles. So just keep that in mind. Same with the 21, the average of 21 candles. And that, I believe, is the 50. So just keep that in mind. Now, Bitcoin, I believe, is compressing for a big move. Mainly because we're straddling that very key level of resistance now turns support here at 24. So yes, we could come back down and retest these levels, but I think max pain is to the upside now. I think the market is so heavily short, so in futures and whatnot, and sentiment's just really, really bad. And I've just got that there to discuss next. The overriding sentiment on Twitter, on Facebook, anywhere you look in the media, it is overwhelmingly bearish, and any rise here, you'd see a significant amount of disbelief. And again, I've been looking at the futures markets, we're still quite short. So that means people are betting against a rally. They're betting that we're actually going lower. So in those sort of situations, if the market does move higher based on just spot buying, so people just coming in and just buying it rather than selling it, then we do see a bit of those, the futures markets react, where everyone's so leveraged to go down. If it does move higher, all those people leveraged to go down get liquidated to the upside, and creates this release valve, almost like a beach ball being held underwater. So just imagine that when you're at these lows, when you have extreme lows, now the pressure actually does turn onto the bears, even though it doesn't feel like it after we're, what, 60% down or 50% down from the highs. So just keep that in mind. But the RSI here on the daily is compressing into this little triangle we see, is same as this ascending triangle we see here. Bitcoin just looks like it wants to break to the upside based on this positive trend, and also based on the RSI trend. It looks like we want to break up to the upside. So I do see 28,000 as a short-term target, but sellers will re-engage in that area and there. So if you start to get those moon boy targets in your head, especially with altcoins and especially with Bitcoin, you need to temper your expectations. You must maintain your objectivity. We're still in a bear market, and there isn't a tremendous amount of capital out there that is willing to come back in just yet until some of the macro improves. All right, SHIBA INU. Now, just want to highlight this. There was a reason why this pumped, in my opinion, and it was because it was added to Binance Card. You can just see there. So in bear markets, any small little random fundamental information can have a strange effect where you do see a bit of a run, some whales playing some games, and we're seeing that with SHIBA INU here. Now, why I say that, you might think, well, SHIBA INU, it should pump when it pumps, and whatnot. But in bear markets, SHIBA INU is a retail sentiment-driven coin. You have to remember that in the back of your head. Right now in this market, we do not have retail, a tremendous amount of retail, if any, in this market. The media is giving it a smash. Everyone's worried about cost of living. We just don't have the capitalist market to see this coin continue to pump, in my opinion, unless you have a huge amount of whales coming with a lot of money. And that's a lot of risk to take on. So you really have to play those probabilities. But right now, you can see it's had this huge move off the bottom, and by huge, it was about 46%, got up to 50%. It's running straight into this 200 moving average on the daily. Again, it's a big move, but the risk is on the bulls here. After a move such as that into a heavy resistance area, you can see the volume above it has to break through here. Now, it could well come up to this area here, but eventually this is going to get sold into heavily. And see the RSI, I've just got down here. Where it is now, it is in line with the peaks of where it was during the height of the bull market at its highs. So this to me looks a little bit toppy in terms of a short-term move. And I think you really have to be careful of these short-term pumps that can turn into dumps. They can sucker a lot of people in. You're saying, oh, Shiba, this is going to go higher. You might buy a bag and then you end up holding it all the way back down to these key support areas where, if you do want to buy, is probably where you want to be waiting. So yes, this can look exciting, especially in bear markets, but that's the worst time. That's the time it can really suck you in, because you think, I really want to chase this pump, when you have to be careful. So just keep that in mind, because to me, being added to Binance Card really shouldn't, it's not a massive fundamental. It's not like a Bitcoin getting bought by BlackRock or anything like that. I mean, this allows you to spend your Shiba. So I guess in a way it's a fundamental reason, but we'll leave it at that. All right, Ethereum looking quite nice here, to be honest. And I've just got the price levels all lined up here, and I'll tell you what it's running into in just a sec. So the RSI, you can just see it's been trending down for a very, very long time underneath this line. Ethereum's broken out. And in my opinion, it's all to do with the excitement running into the merge into mid-September. There is likely going to be a bit of a buy the rumor, sell the news event. So there's going to be this excitement, this anticipation, the run up. Everyone's buying Ethereum, and then when the actual merge happens, what we see a tremendous amount, especially in bear markets, is a sell the event situation where the token just dumps after that, and then it will work itself out from there. So just be prepared. It's not going to be up in a straight line. Maybe in the short term it will, and it will be a very bullish catalyst, and that's something we're going to be looking into quite deeply in our monthly newsletter, which comes out in a couple of weeks. But just keep that in mind, that there are risks at the tail end of this, but in the near term, I think this is tremendously bullish for Ethereum. Now, right now on the weekly, it's running into both the 21 moving average and the 21 exponential moving average. So that's the EMA. Now, why I've got both, I just wanted to show you there how close they are. The EMA generally is a bit better to use on longer term, or cryptos that have a bit longer price history. It tends to give you a bit more, a better read in terms of the volatility. I still prefer the good old simple moving average. I think over a longer period of time gives you a flatter moving average. Generally, price does come back to it, kisses it. But the exponential, you see price actually crack through it and does show a bit of volatility underneath and above it. I'd rather the flatter moving average. It's totally up to you. And I know on the course we show you both. The exponential is probably a little bit better for cryptos that have a shorter lifespan, which are most. They've only been around for a year or two, but for the longer term cryptos, I still prefer the moving average. But I wanted to bring them up here just to show you how close they are. So in most instances, they're fairly close to each other anyway. But the simple moving average is a little bit higher. So for me, we're running into both. But if we get above that 21 on the moving average, which is that line there, then these targets are absolutely in play. 26.41. These are the levels that you see these moves back over here on the left-hand side when we're in bull markets. That was a really strong level there before we went higher. This level here, though, I think is going to be the toughest one to crack, 23.20. Simply because it was this support level, which we cracked in a couple of times, then had the dead cat bounce and then the sell-off into capitulation. What I think is pretty likely, though, I mean, I love the RSI doing its thing here, but this is what, 1, 2, 3, 4, 5, 6 weekly green candles. Absolutely, I think we can go a couple more. But running into this, volume resistance on the right-hand side and these moving averages, I just feel it's probably likely. If Bitcoin shows a bit of weakness here as well, then we have a pullback to around 1,700. So that would be a really nice reload zone to go higher into these areas. Absolutely, we can keep going now. Then you'd see a deeper pullback up into these areas. But if we have a nice pullback now and we have that run up in the midterm, then we can go higher quicker. That's essentially what I think and what will play out. So guys, I think that's pretty much everything I wanted to show you here. Apart from those moving averages, yeah, so that's confluent. The 2320 is the 200 daily. So the larger moving averages obviously are ones you really want to watch, and I think we can absolutely tag that in the short term before a pullback. So yeah, very useful to go down these time frames and just see what it's telling you. Positive trend all the way right now. So again, trend is your friend until the end, until that changes. And any pullbacks, really want to look at those Fibonacci retracements to give you that that extra information. So just quickly, a Fibonacci retracement, it's absolutely in our course on how to use them, but an uptrending environment, Fibonacci retracements give you areas of interest and levels, and I'll just zoom in a little bit, that markets tend to gravitate towards on the way down. So you can see here, we've had a move back to the 0.236, almost 0.382. I do expect this probably come back confluent with the 0.786 at some point and these moving averages, or the 0.618. If those moving averages come up to about here, then the market has a lot of scope to come back down in this nice uptrend to keep it going. So that's how I see it, guys. I hope you enjoyed this Monday market update. Have a great day, and we'll catch you for our altcoin Bible on Wednesday. Bye.